get asked about down payment assistance programs all the time. And the conversation usually starts with, "Hi, I'm a first-time home buyer and I want to see what benefits are available to me." And normally someone saying that they're a first-time home buyer usually ends up meaning that they want access to help with either closing costs or down payment assistance. And usually folks that are repeat buyers, or they may have helped someone else co-sign, or they just make really good income, think that they don't qualify for down payment assistance because most down payment assistance programs require you to either be a first-time home buyer or to meet strict income guidelines. So today, I wanted to focus on one very specific down payment assistance program that is open to a wide range of borrowers and is breaking the mold. It's not a gimmick. You don't need to be a first-time home buyer, and there aren't any income limits. This special program is the FHA 100% CLTV program. It's a mouthful, but it's also got a lot to unpack. So let's dive into it. The FHA 100% CLTV program is just a long-winded way of saying that FHA has a no money down option. It allows borrowers to access homeownership where they have the ability to make that monthly payment. They're doing it consistently. Maybe they've had some credit hiccups along the way, or maybe their credit's immaculate, but they've just had a hard time building up that savings for whatever life circumstances has come their way. And maybe they don't have the ability to tap into a retirement program, and they don't have family members who are able to gift them funds. This is the perfect program. Here's the structure. You are getting two loans at the same time. The first one is the traditional FHA mortgage at 96.5% loan to value. That second loan covers that remaining 3.5% that makes up the down payment for a total of 100% CLTV. And the CLTV is the combined loan to value. That second loan is not a grant. It's a 10-year fixed mortgage that is designed to help cover the down payment and or some of the closing costs. So if you had your down payment covered and you're like, I have 3.5% down, you can still use that assistance to cover all of your closing costs. The interest rate on the second loan is just 2% higher than whatever the first loan ends up being. So if you have your first loan at 6.5%, then the second loan for that smaller portion of the down payment is going to be at 8.5%. That interest rate will be fixed for the entire time that you are paying on that down payment assistance. So you have the confidence in knowing what that payment is going to be every single month. What makes this program stand out is that it's more flexible than most. You don't have to be a first-time home buyer. There are no income limits, and it's available mostly nationwide. The only state it's not is in New York. The program is designed for primary residences only, so you do need to intend to occupy the home for at least the first year after purchasing, and then occupy it within those first 60 days of your loan funding. Credit and underwriting is pretty straightforward and mirrors FHA's guidelines because it's an FHA program. There are a couple additional restrictions, and specifically for the minimum FICO score. FHA has program options available all the way down to 500, but anything from 500 to 580 requires 10% down, so this one wouldn't apply. And this particular program has a slightly higher restriction that they require a minimum of 600 for the credit score if we received proof eligible findings from our automated underwriting system. But if for some reason we need to go the route of manually underwriting the loan, then we need at least a 660 credit score. Proof that borrowers completed a homebuyer education course is a requirement of the program, but there's a lot of different options. It just needs to go through a HUD-approved agency, so something similar to Fannie Mae's HomeView course or Freddie Mac's Credit Smart course. Eligible borrowers include U.S. citizens, permanent residents, and they even allow non-occupant co-borrowers. However, unfortunately, the program is not currently available for DACA recipients or non-permanent residents. So now let's talk about how those two loans actually come and work together. So that first functions just like that normal FHA loan would. You're going to have upfront mortgage insurance, the monthly mortgage insurance. It's a 30-year fixed loan, and it has the same benefits that FHA is known for, which is their low interest rates and flexible guidelines. So you could still have impeccable credit and still benefit from FHA's guidelines. It helps with student loans, having those payments, whether you're in deferment or making payments. If you did happen to have a foreclosure or bankruptcy, it just needs to be 4 years from when that event was over and have some reestablished credit. And then, of course, meeting those minimum credit score requirements. So that second mortgage is sponsored by the National Homebuyer Fund in most states, except for Washington State, which that one is by the Interagency Home Finance Cooperative. Here's what you need to know about that loan. It's a 10-year fixed loan, and that interest rate is set based on whatever the first loan ends up being at. So if we're at 6.5% on your first loan, that second one will be 2% higher. So that's 8.5% on that second loan. It can be used for your down payment and or your closing costs. Borrowers can't have any cash back at closing, and they do need to close at the same time. Borrowers are not stuck in this loan. Again, it's like any other loan. You can refinance. So if in the future you get to a point where a refinance makes sense, you just have to keep in mind that you do need to pay off the down payment loan at that point because it cannot be subordinated. Think of that second loan to bridge the gap, to get you into that home now, rather than waiting however long it would take to save up that down payment. Now let's dig into the type of property that this program is eligible for. So you do have a wide range, but let's dig into the ones that don't fit in the box for this. So it is not eligible for a 3 to 4 unit property, a co-op, a condotel, non-warrantable condos, or income producing properties like farms or ranches. But it is eligible for a single family home, a 1-unit condo, a PUD, which is a planned unit development, whether that's attached or detached. You can also use this on a double wide manufactured home that is on land that you own, so not in a park that has leased land. And you can have it on a duplex or a 2-unit property, just as long as the owner is going to occupy one of the units. For condos, you can buy in a complex that is already FHA approved, or you can go through the process of a single unit approval or a spot approval. Now, going through the underwriting process, it follows standard FHA guidelines. So it's full document of income, employment, and looking at your credit history. We will need to run it through our automated underwriting system. And if we receive and approve eligible, we can have our debt to income ratios go all the way up to 56%, where most down payment assistance has a more restrictive debt to income ratio associated with it. Now, if we do need to go the route of needing a manual underwrite, then we will need to keep that debt to income ratio at 45% or less. For student loans, we'll use whatever the payment is that's listed on the credit report that you're currently paying. Or if there's no payment listed, then we'll take the combined balance of your student loans and then we'll just multiply that number by 0.5% and use that as our artificial number for that monthly payment. If you happen to have a collection or judgment, then it's just going to depend on the type because it may need to be addressed, but in some cases they don't. So that might just need to take a little bit deeper dive. That second loan doesn't require any separate credit report being pulled or income verification. It's just underwritten side by side during the underwriting portion of the first loan. Now, here's what I love about this program and also what I think you need to consider before you apply for it. So it's no down payment required. It's 100% financing available to make homeownership happen now. It's open to both first-time homebuyers and repeat homebuyers. There's no income limits or geographical restrictions, so you don't need to live or be buying in a certain neighborhood in order to qualify. It can even be paired with a 2-1 buy down to help make that first interest rate even lower for those first couple years. And just like any other FHA loan, gift funds are allowed, a non-occupant co-borrower is allowed, and you can get seller credits up to 6% to help also cover those closing costs. And then just a few things to consider. You will have 2 monthly payments for both that first and that second loan. You still need to qualify based on FHA's credit and income standards. And that second loan will need to get paid off if you decide to refinance or sell. But for buyers paying high rent and struggling to save that down payment, this program could be perfect to help turn your goals of homeownership into reality without having to continue to wait years to make it happen. If you've been holding off on buying a home because you're having a hard time saving up that down payment, this program might be a good fit. My name is Amber Jones. I'm a certified mortgage advisor, and I'm here to help inform you, empower you, and help you solve the financial obstacle that you're currently facing wherever you're at on your homeownership journey. I would love an opportunity to talk to you to see, is this program a good fit or would another one be a better suit? All of my contact information is below, where you can book a 15-minute phone consultation with me and we can explore your options. I hope you found this information helpful. And if you did, I would love it if you liked it, subscribed, but most importantly, shared it with a friend. I hope you have an amazing rest of your day, and I'll see you again next time. Bye bye.